Hello, my name is Joe, and today the purpose of this video is to inform our audience on how the stock market operates. So that includes structure of the market, types of investments, and the factors that influence stock prices. So without further ado, let's go into it. So I'm sure many of us have heard about the stock market, people talking about investing, you know, maybe you heard it on the news, in movies, or even among your friends. But what does it mean to invest, and how does one go about understanding how the market operates? So let's get into it. But first of all, how many of us know how stock market works? What's the difference between a stock and a bond, or why apples um, price fluctuates? It goes up and down every day. So there's a multitude of factors on why that happens, and let's go ahead and go into it. So understanding how the market sounds complicated at first, but it really comes down to learning a few key things, especially what the market is, what types of investment exist in the market, and what causes prices to fall and rise. So let's go. All right. So I'm going to walk you through the main things first. First, what the stock market is, how it functions. Second, how different types of stocks and investment are available. Third, what causes prices to change from day to day. So let's start about the basics. Stock market is a system where people buy and sell shares or prices of ownership in public companies. According to U.S. Securities and Exchange, which is the SEC, the stock market lets companies raise money by selling shares, while investors get a chance to own a piece of those companies and hopefully earn a return. So these trades happen at stock exchanges. Think of them like big marketplaces. So I'm sure you heard of the NASDAQ or New York Stock Exchange. And if not, those are two publicly traded places where people go and purchase stocks and where they're sold. So most trading happens digitally through online platforms like Robinhood, Fidelity, Charles Schwab, many other ones. And while that might seem super modern, the goal is still the same. Companies want to grow, investors want a piece of the action. So it's, at the end of the day, it's all regulated by the government to make sure things are fair and transparent. The SEC makes sure that no one is committing fraud or manipulating prices. And now that we know what the market is, look at what people actually invest in. So the most common investment in stock is a stock. There are two main types. A common stock, which basically gives you shareholders voting rights and sometimes dividends. Depends what kind of stock you're invested in. And there's also preferred stock, which usually doesn't offer voting but gives fixed dividends, meaning regular payouts. Beyond stocks, you have mutual funds and ETFs, exchange traded funds. These are great for beginners because they bundle a bunch of stocks together. So instead of buying one company, you're investing many at once. This may also include different sectors. There's healthcare sectors, there's real estate sectors. So it all depends at the end of the day what you want to invest in, what your main goal is. So there's also bonds, basically loans you get to companies, the government in exchange for interest, and also REITs, which are real estate investment trusts, will let you invest in real estate without buying property. So each option comes different levels of risk and reward. So depending on your goals, one type might make more sense than the other. You might be wondering, if I buy stock today, what makes the price go up or down tomorrow? And the short answer is supply and demand. But there's a lot of things that influence that demand. For example, if Apple releases a popular new iPhone and reports strong profits, more people want to invest, so the price goes up. But if they miss earnings or get sued, many people sell and the price drops. Economic conditions matter as well. Things like inflation, interest rates, unemployment, even political events can impact all the stock markets. You probably heard of terms like the bull market, bear market. A bull market means that the prices are generally rising, while bear market therefore means that prices are falling. And there's this little bull right here just to represent, bull market. So, we also track overall trends using market indexes like S&P 500 and Dow Jones represents a group of major companies. If the S&P 500 is up, it's a good sign of the economy. For the economy, if it's down, it can signal trouble. So a lot of things it's a multitude of factors that affect the market, and it's all psychological. You can't really predict what's gonna drop or what's gonna go up. There's certain indicators sometimes that kind of like show if it's gonna go up or down, but it's really hard to determine, since the market can sometimes be really volatile. So let's quickly review what we covered today. First, we talked about what the stock market is. It's a place for buying and selling shares of companies. Second, we broke down different types of investments, from common stocks to mutual funds and bonds. And finally, we explore what causes prices to move, like company performance and overall economic trends. The stock market can seem intimidating at first, but once you understand the basics, it's honestly a powerful tool, not just for investors, but for anybody trying to make sense of the world around them. Whether you choose to invest or not, being informed on how it works is a life skill worth having. And thank you for listening. Bye.